Hello, everybody. This is Troy. I'm a senior account manager with AvaTrade. We'll be starting the crypto webinar at this time. Before we get going, let's do a quick systems check. If you would, type OK in the chat box if you're seeing my screen all right and hearing me clearly. What you should see is a slide that says trading crypto-based CFDs. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, just let me know in the chat box. And also, for that matter, any questions, any input you want to give to share with others, feel free to communicate in the chat box for all of those reasons. Lots of good movements coming into the week here with the cryptocurrencies. Looks like some opportunistic entry points. Potentially, we'll look at some of the latest fundamental news and also then jump on the charts on my demo and take a look at the live movements, work out some potential strategies that could bring some nice potential profits without too much risk if you set things up in some different ways that are possible. And as we get going, as always, keep in mind, all investments have risk. Trading cryptos and really any investments, CFDs, forex trading, spread betting, options have their level of risk. But obviously, we're all here because they also have their high level of potential profit as well, which is what we're all after. Something like you see on the slide, there's something like a third or maybe a little less of all traders with AvaTrade have long-term success, which you might say, well, the majority of people don't. You have to understand a lot of people get into trading on a whim and don't really take the time to come to webinars, to take things seriously. If you think about it, like what percent of small businesses fail before they succeed? It's the same idea. You really have to put some tools on your tool belt, get some knowledge, some strategies, take it seriously. And about a third of all traders do that and can find long-term success. So don't be frustrated if starting out you haven't had success. I believe that anybody who's taking things seriously and learning and building their strategies and improving upon them can be one of those maybe a third or so that are having long-term success. And my goal is with AvaTrade to have that number get larger and larger over time, because we are a hedging broker. We don't count on people to lose to profit. Our business structure is to profit from the spreads and the overnight swaps and have a fair marketplace where we can match tickets in each direction, that sort of thing. So the better you do, the better for us, because then people trade long-term and bring nice spreads long-term for the company. If you want to read our full risk disclosure statement, it's on our website. Feel free to check it out. As long as we're talking about risk, keep in mind on our AvaGo app, if you haven't looked at it, get it on your mobile device. You'll see that we have a unique option that only AvaTrade is offering, and it's unique only to the AvaGo app. If you log into your account using that app, you'll see that there's a feature called Ava Protect. It's a unique way to protect your trades against losses. It's available on all FX pairings pretty much, and also gold, silver, and eventually maybe some other assets. You'll see you can set up a trade. As you're setting it up, you can choose Ava Protect and protect against any losses for defined time periods for a flat cost, for a small premium cost. It's not right for every strategy, but when you have a strategy that's going to close in a day or 2 days or 3 days or maybe 6 hours, you can pick different time frames that if it goes the wrong way, you're covered. It's all added back during any losses you have during the covered period. If it goes the right way, your cost for that protection is only that flat premium cost that you know up front. If we have time, I'll take a look at it with you on the AvaTrade website during the webinar. If anyone has questions, you can ask your account managers as well. But it's something to check out as long as we're talking about risk. Also, keep in mind what we go over is not meant to be financial advisement in the webinars, but it should be taken as educational to help you build upon your strategy, to improve upon the resources that you can find to use, to improve upon entry points, exit points, strategy basis, so that what you're doing is based on real knowledge and information. We're beginning right now, Shanti. So With that said, let's move on. Let's take a look. What's the most recent fundamental news? And then we'll get to the charts for potential entry points. We see this was shown last week on this website, and they saw fit to show it again. Even though you see the article is from the 4th, they're still posting it in a spot where you see it right away. And the reason is that's major news. As you look and you see that major financial advisors are starting to warm up to putting cryptocurrencies in portfolios, that they're looking at cryptocurrencies more and more. And this goes along with the mainstreaming with banks, with retail outlets accepting payments from different crypto brands. The mainstreaming of the cryptocurrencies, as we see here with financial advisors also taking them more seriously, it's helping the trending on the charts. It really is. The predictability of the movements, the volume of trading is increasing again on cryptocurrencies because of this type of information, this type of news. And so cryptos kind of died down after their big, couple years ago, big boom, and now they seem to be coming back. And the charts are becoming very, very predictable. And keep in mind that cryptocurrencies are decentralized. What does that mean? That means they're not affected so much by individual jobs announcements out of the US or the European Union or Australia, or factory production numbers or whatever they might be. You can look at cryptocurrencies more like gold, which is countryless. It responds to global movements, not necessarily one trend out of a certain country. You don't have to watch all these individual economic announcements. And so because cryptocurrencies are less affected by those types of fundamental news coming out of different countries, they're more predictable many times with the technical analysis. You don't have to pay attention to the fundamentals as much. Pure technical traders that are skilled at it find that cryptocurrencies many times are easier to trade with pure technical analysis than regular currencies or other assets. Okay, something to keep in mind. What we see here now, this is an article that came out today, not that long ago. Samsung might have new crypto surprise as Galaxy S20 set for debut. They're talking about having new features for crypto wallets, new security features that will allow people to feel more comfortable, again, investing and using cryptocurrencies for financial payments and exchanges. Okay, so major retailers, major outlets, major producers of products are more and more building features into their products or into their stores to allow the use of cryptocurrencies. We keep seeing it over and over with headlines each week. And so even though not the regulators in a lot of the countries haven't come around yet to officially recognizing cryptos as legitimate assets in their eyes, they also aren't necessarily banning them either in most places. And then banks are creating their own digital currencies. A lot of private companies are issuing stock using the same technology that cryptocurrencies are based on, the blockchain technology. And so more and more, it's becoming mainstreamed. And so we can see here the latest article. This came out today. Bitcoin and altcoins dip and present a buying opportunity. Okay, so this is the fundamental view right now. Adeyemi, I'm sorry if I'm mispronouncing your name. You're asking if gold is affected by the US dollar. One thing to keep in mind is gold is paired against the US dollar, right? The exchange currency for gold is USD. It's paired against the USD unless you specifically choose gold euro or gold with some other pairing. Same with oil, same with some of these other global commodities. And so Bitcoin also paired against the USD. So certainly if the USD has reason to weaken, that helps cryptos climb, right? If they're paired against the USD. We do have some offerings where they're paired against the euro and paired against the yen, etc. But most of the pairings with cryptos are paired against the USD, and that's the same case on our platform too. Okay, good question. So if we take a quick look at what's happening in the markets, what's the US dollar doing today? Kind of flat. You see here the dollar index. It's a mix of the major USD pairings. Nothing major, kind of flat, 0.17% up, less than 0.2% up. So kind of flat, not really a major factor in terms of moving the cryptos if the US dollar is pretty flat. So we can then just pay closer attention to the technical analysis and the fundamentals that exist directly regarding the crypto industry, which we just looked at. Okay, if we looked here and we saw the US dollar was up 1.5%, then we might be thinking, hey, that could help pull the cryptos down if they're paired against the USD, right? So it's something to keep in mind. Now, what do we see on the market? All green, right? Futures are green, green from Friday. Also, everything's up, up, up right now in the markets. So that tells you that safe havens maybe are weakening a little bit, right? The volatility index is down a bit, but not huge, okay? Not a huge effect here. I've seen the volatility index drop 7%, 10%, 12%. Then you'd say, wow, the safe havens are really weakening. And sometimes the cryptos have behaved like safe havens because they're countryless. And so, gold's not necessarily plunging today. The VIX index, sometimes referred to as the fear index, is dropping, but not much. Okay, so safe havens probably aren't having huge movements in reaction to the volatility dropping a bit. Okay, so this gives you a brief overview of the general overview of the market, maybe some optimism on the market, but nothing huge going on right now. Kind of flat, up a little. Okay, I think the bigger effect on the cryptocurrencies are probably these articles here. Some positive news about how investors are viewing cryptos. The fact that there might be an opportunistic entry point because the cryptocurrencies dropped over the weekend, and some specific news about Samsung, which is obviously the number 2, some say number 1 seller of phones, smartphones. So huge that they'd be building special security wallets for cryptos into their operating system for their new phone. That's really huge news. That could affect millions of people that then would have maybe more confidence to invest in and purchase with and trade in those types of assets. Okay, so with that general news in mind, then we go to the charts. Let's take a look. So this is my demo account, but it's exact same movements as the live accounts. Okay, so you can, if you have a split screen or you have 2 screens, you're welcome to have both your account and open and on another screen watching what we're doing here. Obviously implementing things only if you see fit, not because I say something, but because you understand it and you believe in it as well. So let me get rid of some of these old lines. Right now we're looking at Bitcoin versus the USD. Some of those lines came true. I should have showed them before I deleted them, all this uptrend we were showing. Okay, so these are 1-hour candles, so it gives us a good look. We see this was an old resistance level. Okay, resistance, 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 resistance. Guys, this was an easy pending order. What kind of pending order coming through the weekend could we have put right above this established resistance, 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 purely technical based, without having to look at any fundamental news? Pending order, if it broke the resistance, what pending order would have got you in on this profit? Yeah, buy stop. Very easy strategy. Those of you who trade cryptos, most of you are technical traders anyways. Very simple. Go from market execution to pending order. If you want to buy from a higher point, that's a buy stop, which many of you indicated already. So if the movement was down here, you viewed this resistance and the support for that matter. And the support. So resistance, support, resistance, 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 support. Okay, it's established there, right? So many times I say this, to be profitable, though, I showed you like a third of traders or so are profiting long term. Those traders are not necessarily trying to guess the market. They don't need to be right. They need to be smart. There's a difference. Traders who always believe they have to be right, they don't cover the what if scenarios, meaning trading should be like a chess match. You thought through not just the first move, but the second and the third and the fourth, saying, if this happens, then I do that. If that happens, then I do this. And in the end, find a way to profit, even if you're wrong on the first move or the second move. Okay. And we'll walk through some of those ideas. The first part of this idea, if we go back to Friday, would have been seeing this range here, it's ranging, and saying, I know cryptos, I know what they do. Okay. So we can say resistance, support. What pending order would you have prepared below the support in case it did the opposite? Again, not trying to guess the market, but being smart here. If it broke through the support, sell stop, exactly. In which case you would have prepared a buy stop up here and a sell stop on the bottom. There's sell stop. Sell stop sells from a lower point. Buy stop buys from a higher point, which is counterintuitive to many traders. Many traders would say, well, don't I want to get in at a low point if I'm buying, or at a high point if I'm selling? Why would I wait till it goes up and then buy? Or why would I wait till it goes down and then sell? And the simple answer to that is confirmation of movement, confirmation of trend. By breaking through the resistance, that confirms many times in the trader's mind that, ooh, upward momentum, uptrend. It broke the resistance. So you're willing to sacrifice some of that profit, waiting for it to get to a higher point before you buy, for the benefit of seeing that it broke the resistance and has upward momentum. And many times you avoid false signals that way. Think about it. If you're buying from the support all the time, that means you're buying in a dropping market, going against the trend. Now, if it bounces off the support, right, and starts an uptrend on the 1 minute candles, the 5 minute candles, then that's a confirmation of a reversal, and you might do a market move, right? And I'm not against trading up from support levels either, because you see here, this would have profited once, twice, right? You could have been trading down from the resistance. Resistance, you would have profited once, twice, 3 times before it broke. Okay, so it's okay to do the reversal trades, but you can back yourself up with the breakthroughs too. Okay, but many times the breakthroughs create the bigger movements because it took momentum to break through. To reverse off the resistance back down, or to reverse off the support back up, doesn't always take much momentum. So the movements are smaller. You see the reversal here barely went halfway down. The reversal here barely went halfway down. Once it broke through, look at the size of the climb, much bigger than the ranging movements. Okay, so that's something that most technical traders recognize, that profit potential tends to be bigger on breakthroughs than it does on ranging, unless the ranging is much larger. If we're looking at bigger ranges, 4-hour candles, 1-day candles, then those ranges are larger and the reversals many times are much bigger. Okay. Bola, good question. What is the leverage and lot size for cryptocurrency? Number one, it depends on your location in the world. Okay. I can real quick show you. It's a good question. We'll come right back to my point here about these movements in a second. If we go to AvaTrade's website, this is for everybody. Trading info, click on trading info. Then over here on the side, trading conditions, click on that. And you will see for all assets, the different types of assets are listed here. The leverage, the margin percentage requirement, which is determined by the leverage, right? 400 to 1, 1 out of 400 is 1/4%. That's the margin percentage is the leverage. It's the same thing looked at as a percentage rather than a ratio. 400 to 1 is 1/4% margin requirement. And the typical spread. Now, if you want more information about any of these, and here's the cryptos, okay, cryptocurrency. This is on our global site. Leverages are different if you're ESMA regulated, for example. So there are different regulatory bodies around the world. Leverages can be different. So check your site that you registered from, and you'll see what your leverage is. 25 to 1 on Bitcoin here, you might see 10 to 1 or 5 to 1 or something different in different areas of the world. Okay. Now, if you do the search, right, you can do, let's BTC. Okay, here's Bitcoin. Now I can see more information. I can see the overnight interest rate, right? I can see the let's see here, the exchange. Okay, if an asset has a particular exchange, it's listed. The cryptos don't. But other assets, it'll show that, shows trading hours, everything, a more expanded view of the asset when you do the search feature. Okay. If any questions on that, let me know. And while we're here, I hate to sidetrack. Yeah, Philip, I don't know if you can still hear me. You're having weather issues. All webinars are recorded and available on our YouTube channel. By tomorrow morning or afternoon, this session will be uploaded to our YouTube channel, and same as all sessions, so you can catch all of those. Okay, so trading conditions, you search at the top. Once you go to trading conditions, and you can find all information and expanded information by searching here. All right, so as long as we're here, we can look at the Ava Protect. Remember, I talked about that through the AvaGo app. Here's Ava Protect. I don't want to spend too much time on this because I want to get to the crypto movements and strategies. You can see here's the Ava Protect feature. You pick the time. It shows you the price of the coverage. No matter how far it goes the wrong way in that time period, if it's in the negative when that time period ends, or if you manually close the trade during the time period, it's added back to your account. You can reopen the trade if you close it, or it's still open if the time period ends while the trade's still running. You get the negative floating added back when the time period ends, and the trade keeps going. It's a great feature. It's not on cryptos yet, but it's on all currency pairings, gold, silver, maybe some other assets by now. But if it's available on an asset, you'll see it in the trade setup. Really cool feature. Only AvaTrade has this, and only through the AvaGo app when you log into your account. You can watch a video on it down here. Watch our video. It'll load here in a second, and it explains the whole thing to you. And you'll see it in our AvaGo app, which you can download either Google Play or Apple App Store. Okay. Let's go back to the charts. So here's our resistance. Here's our support. Here's our breakthrough. This one would never have been triggered. And this one would have been triggered. You can see once it broke through, it never came back down much to test. Here's your breakthrough candles. Once you got in, never would have hit your stop loss back down here. You don't have to risk much. Stop loss back below the resistance that got broken, never would have been hit. There's your profit. You'd say, okay, where should I take profit? Many times traders will just wait until it starts to go sideways. So there's the rise. It goes sideways within 5, 6, 7 hours. Boom. If you're scalping, there's your profit taking signal right there. It went sideways. We can look and say, okay, how much would I have made with that simple pending order? I look and I see 9,850 or so would have been my entry point. My pending order, I would have been clear of these wicks on the resistance, right about there. So realistically speaking, I'd have gotten in, let's say 98.75. I might have gotten in with my entry point, and it climbed all the way to 10,122. So let's be fair and say I would have gotten out somewhere in the middle of this consolidation. So even if I say 10,100, okay, that's $125 climb. $125 climb per coin with a simple buy stop pending order that I didn't have to really do much to win. Just simple technical analysis. This is what I was alluding to as we were getting started, that cryptocurrencies trend very nice for technical traders compared to many other assets. You less often see the breakthrough coming back down, hitting your stop loss, back up. A lot of times you have clean breakthroughs like you see right here. Okay, not always. Obviously, nobody wins 100% of the time, but many times you see clean breakthroughs just like this. Okay, so and again, if you've been coming to this webinars, we see the same thing. It's not like it's just tonight, right? So clean breakthrough, there's your profit. If you were risking from your entry point here underneath your stop loss, you were risking maybe from maybe $50 risk to get below the broken the broke through resistance to get back below it for your stop loss, and you made at least double that. Okay, so you could be right only 50% of the time and you're still profiting, because with this type of breakthrough, your risk was half of what you made. I could be wrong and then right, and I made double what I lost when I was wrong. Okay, in this example. So this is where, again, you don't have to be right to profit necessarily. You just have to be smart. And so if you're smart with your exposure and your potential profit, and there are different ways to set it up. Okay, smart doesn't mean you have to do it with half the risk and double the potential profit. You could have put your stop loss not just below one support level, but below a second one if you believed in the movement. Now you're even less likely to get stopped out with a temporary signal down and then it goes up. So some people are willing to maybe take a smaller trade, put your stop loss below 2 support levels. Now it's even less likely to get hit on a false signal before it climbs. So everybody's strategy in terms of risk management can be a little different. So there's more than one way to profit. Keep that in mind. With the example I'm showing, I'm saying half the risk, double the potential profit. I only have to be right 50% of the time and I'm profiting. I could even be right only 40% of the time with that type of setup and profit. So I could be right 4 out of 10, lose 6 out of 10 and still win with this type of setup and movement. Not so hard to do if you're choosy, if you're watching the fundamental news and understanding what's happening and then picking your entry points accordingly. Okay. So now the question is, what do we do now? Okay. So what I see is this is in the middle of deciding which way to go. Now, the fundamental news we just looked at says this should climb. Okay. We just looked at fundamental news that seemed positive for the crypto industry. It's consolidating. Exactly. Why is it consolidating? Predictably, it's consolidating where? Right on the old resistance, which becomes the new support. It's predictable. This would have been another easy win, right? It breaks this support. It breaks the support. You're in on a sell stop. Where would you have taken your profit? Just before this old support. Okay, so you'd have taken your profit somewhere here just before the old support if you're using typical scalping techniques. I say scalping, right? But that's like an $80, $75 move, right? That covers the spread plus $30, $40 profit per coin in your position. Okay, I say per coin. If you have a large enough balance, you could have multiple coins on that move. Be making quite a take on these small movements. Small, I mean in terms of time. Pretty large in terms of potential gain. Okay, so right now it's the technicals right now to me are 50-50. The technical analysis, I say I have no idea which way it'll go. I don't know how to guess the market. I know how to trade the market. So what can we do? Same thing, can't we? If it breaks to a high point above this resistance, you could do a buy stop from here. If you establish that it's an uptrend again, and if you did a buy stop, your take profit might be at the established ceiling right up here. Okay, that's one potential move. The other potential move is if it breaks this support down here, then maybe you're getting in on a sell stop. Okay, I think there's a potential for a false signal on the way down for 2 reasons. You've got another support level that's close right here. So if it breaks this support and you got in on a sell stop, look how quick you reach the next support level. Support, support. So if I'm selling, I might not sell from this broken support. I might wait for a more substantial move if it breaks the second support down here. Okay, so I view the buy differently than the sell. The buy has a much higher ceiling, faster, with less resistance to climb. And remember, the fundamentals maybe are on your side on the buy. Again, no guarantee it'll run back up to the ceiling, but it was just there earlier today, this morning. So huge potential, or maybe I should say last night, huge potential to climb if it retraces back up. So maybe you get in quicker if it breaks through the small resistance. On the way down, I see a quick, strong support level right here, even if it breaks the current support. So maybe you're more patient before you establish that, yeah, I'll get in on a sell. But that's up to you, right? I'm not here to tell you that, but I'm pointing out the way I think, right? That if I'm going against the fundamental news, I'm more patient on my entry point. The fundamental news looks positive. The headlines say, and again, let's look at what did the headlines say? Whoops. Geez, I'm clicking on everything but what I wanted to. Let's get there. There we are. Remember what the headline said? Bitcoin and altcoin dips present buying opportunity, right? And major investment force awakens with financial advisors to Bitcoin. Samsung might have new crypto surprise. All the articles today are positive. Okay, so and the entry points seem opportunistic for buying. Now, with all that said, doesn't mean it can't drop. But if I'm on the fence with this consolidation, I'm saying I feel 50-50 right now as to the technical analysis, then the only way to have a preference in direction is to apply the fundamental news. So I have a quicker in on my buy today, a slower in on my sell. I want this support and this one broken to establish momentum down before I might get in on my sell stop. So I might program a sell stop from down here, a little further away. My buy stop might be here with a smaller position, so I can stretch my stop loss below 1 and 2 support levels before I give up. By taking a smaller position, I can widen the stop loss and be more patient without having to risk more. Okay, this is what I see technical analysis wise and fundamentally that might make sense. Now, you obviously can be more aggressive. You can go in a different direction. That's okay. But as long as you understand the concepts and you see the price levels, the resistance, the support, you understand the idea of if it breaks one, it certainly could bounce off the other. Okay, take all of that into account because we can see on the chart that the technicals tend to be meaningful with these crypto movements. Any questions, comments before we go to another screen, another asset? Okay, good. Let's move on. And if anything pops up, I'll answer. One thing that is nice is to trade on indices, and that goes for indices on the regular market, meaning Dow Jones, DAX, S&P, NASDAQ, the China 50, all of these indices, because they react to global economic news, they tend to be more predictable in terms of direction in the bigger picture. The crypto index that we have, the crypto 10, because it's reacting with multiple crypto pairings in one indice, again, any outlier throws off the movement less compared to if you're trading on an individual asset. So if you feel the crypto sentiment, as we looked at, might be positive today, it's a more stable movement trading on the crypto 10 because it has the top 10 traded cryptos by volume in that indice. So if one of them goes shooting the wrong way because some article comes out about that specific cryptocurrency, it doesn't mess up necessarily the movement of the overall indice. So in that case, it lends more stability to the volatility that we all like about cryptocurrencies. Okay, so crypto 10, let's have a look. It looks similar to Bitcoin. Makes sense. Bitcoin's probably the highest volume traded crypto still. And so it has a bigger effect on the crypto 10, but certainly not a singular effect. The other 9 carry more weight than Bitcoin by itself. So again, lending stability to the movement. And you can see the same sort of setup. Resistance. Again, look how easy and picture perfect the trade on this would have been. Buy stop, breakthrough candle here. Buy stop activated here, never went back below the support. If your stop loss was back below it, it tested, bounced, and then up it ran. Okay, so very easy profit with this strategy. And then once it consolidated sideways, take your profit. Okay. Okay, you're asking, would I consider a buy limit at the lower support level? Good question. And Dave, if I was going to do a buy limit, I would prefer the lower support level, because remember I said I wouldn't put my stop loss below the first support because maybe it'll break it, but I feel more safe with it below the longer standing support, the second one down. So for the same reason, I wouldn't be as comfortable buying up off the first support, but the second one, yes, a buy limit would make more sense to me. Okay, so with the crypto 10, I view this support as a little more meaningful than the current one it's sitting on now. Okay, this support's here. This old resistance and then support here has been there as a backup. So if it tests this one and breaks it with the positive momentum that might be on the market for cryptos, it could break the one and bounce quickly off the next one. And many times that happens. So I'll be more patient. Like I said, you don't have to get in on every move, right? You're doing what if scenarios. And where is it more likely to bounce from? Where is it likely to move from? I tend to like breakthrough movements better. Trading reversals, like a buy limit would be, is going against the current trend, right? So if I'm going to go against the current trend, maybe I wait for a more significant support and put my buy limit down here, okay? Rather than buying up, really it would be a market move right now if you're buying off this support, right? That would be a market move if you're buying now. I would only do that with a market move if I saw that it was uptrending, right? How do we establish an uptrend? Let's look at the 5-minute. What is it doing right now? 5-minute, down, 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 down. The 5-minute candles are downtrending, okay? They are certainly downtrending. I don't see higher high points and lower low points yet, okay? What I see is the 5-minute candles capped themselves and then resistance, resistance, and started dropping. So if I saw this start to uptrend again and maybe break through this resistance, right? Breakthrough right here, my buy stop might be on that breakthrough, okay? My buy limit, again, maybe I'm not trusting this first support, but I would buy up off the second one. Again, being opportunistic with where I would want to buy, and there's no reason why you can't sell, right? Once you saw this resistance, you certainly could have taken a shot to sell off the resistance. You obviously would already be in the money, okay? So those are just some ideas to try and improve upon the percent of time that you're right. Now let's go to 1 hour candles. So if this is my preferred buy limit, it's not there yet. I'm being patient. If it breaks into an uptrend that we saw in the 5-minute candles, which would be up here, then I'm in on a buy stop maybe. And again, this isn't me saying that that's the spot you have to use. I'm using basic technical analysis strategy where I'm waiting for a breakthrough and an uptrend to establish itself to get in on the buy, going with the fundamental news. I'm looking at, before I get in on a sell, I want to see broken support and maybe more than one if I'm going against the fundamental news to establish enough momentum, okay? If you want to trade on market moves before the broken support and resistance, this is your prerogative, and you certainly can trade on the bounce. The limit moves where buy limit, sell limit, where you're waiting for it to go down to buy or waiting for it to go up to come down, that's okay too, because cryptocurrencies do trend nicely. Okay, so let's look at Ethereum. What do I see? I still see the market correcting down a little right now. They're having trouble pulling down a bit. So if I'm being patient, I'm waiting for my support level with my buy limits, or I'm waiting for confirmation of an uptrend with my buy stops. If you have in your mind that you want to buy, right? So buy limit with confirmation of maybe a broken support here and a bounce starting, or buy stop if it breaks the resistance. Both of those make sense technical analysis wise. And there's no reason if it breaks a major support like this one Okay, old resistance, major support level here. There's no reason why you can't get in on a sell stop or a market move if you catch it buying. Okay, the key is patience, selectivity with your entry points, and you see how great these cryptocurrencies trade. Let's just look at the history. Okay, this is not to rub it in that look what you could have done, but let me rub it in and show you look what you could have done. Technical analysis, resistance point. Okay, you see it's resistance back here, resistance, resistance, breakthrough candle, simple buy stop, never looked back. Look at the profit you would have had. Okay, again, resistance, resistance, breakthrough candle. Look how much it climbed before it ever came back down below that. Breakthrough, never looked back until it consolidated and then pulled back down. So easy profit buy stop, easy profit buy stop. Let's look at the next one. This was through the last days and weeks. Here's another resistance, resistance, breakthrough candle, never looked back, never broke back below until it went up and consolidated. Again, winner. Okay, so we can go through the last week and say, buy stop, never look back, would have won. 1 out of 1, 2 out of 2, 3 out of 3, 4 out of 4, and 5 out of 5. Let's say you messed up one. 4 out of 5 for sure should have won. Okay, this is the numbers speak for themselves, and I'm all about statistics. I'm all about probabilities, looking at historical data to figure what should work in the future. The future is no guarantee to behave like the past, but what else do we have to look at to try and predict the future other than what has happened in the past, right? We can look at current news to try and help ourselves out like we did, but in the end, you see the statistics and the math that's involved. It's working more than it's not when we look at the history. Simple breakthrough strategies with pending orders. I mean, how a lot of times people put two, 3, 4 indicators on the chart and they make their trading strategy so complex. If you've ever heard the phrase paralysis by analysis, that's what that creates many times. The keep it simple method many times works much better. Okay, so this, you see how simple the strategy would have been over the past week and what your win percentage would have been. Okay, someone's asking, Bola, you're asking buy and hold. What do I think about that? Holding for 2 or 3 years. Listen, if you're going to hold for 2 or 3 years, my advice, go to an exchange and buy the coin. Because on a trading platform like we have here, trading CFDs, you get charged interest overnight. If you're holding it 2 or 3 years, it's going to cost you, right? If you're trading a few weeks, a month or two, that's okay. You start holding months and years on a platform like this, you're probably better off if you're just looking traditional investment to buy a coin and hold it for 3 years, buy it from an exchange and hold it so that you don't get the interest. But what you can do, Bola, let's say you do that. Let's say you buy Bitcoin or Ripple or Ethereum and you're holding these coins. You still, at times like this, where you see resistance, where you see resistance, you can hedge. Because when you own the coins, you can only profit when it goes up. If it gets to a point where you think the probability is it'll go down, resistance, then you can hedge against losses that you have on the coins you're holding by selling on our platform. So that as the price drops, you can actually profit or make up for losses on the coins you're holding. Now, I'm the type, I don't like to hold crypto coins. I like to trade on them CFD style because I want to profit in both directions. I don't want to be stuck losing holding coins when they reach a point where they might drop. Okay, but certainly diversifying that way, owning some coins through an actual exchange where you buy and hold them, and trading on our platform, nothing wrong with that. Okay, yeah, Ebert, as you look at the larger candles and you start doing larger movements, the one-day candles can show you a whole new story. Today, we're focusing on the short-term trading. Maybe next week, we'll look at some longer moves for, week-long, month-long type moves, which is okay. The interest rates aren't much when we look at that type of distance, okay? So I think you can see the point here of what I'm talking about. Very simple strategy: breakthrough, profit, breakthrough, profit, breakthrough, profit. And you can see none of these, except maybe one, came back down that could have touched your stop loss, depending how close you put it. And what did I say? With the potential profit being larger than your risk, you only need to win 4 out of 10 to profit. Here you won 4 out of 5 if you followed that simple strategy. Breakthrough pending orders. Okay, so it doesn't always work this good, but it's been a long time since I can remember a webinar looking at cryptos where it hasn't looked this pretty. It really, cryptos lend themselves to these technical strategies, breakthrough strategies, bounce strategies. They lend themselves to really good potential for profits. Okay, and even high win percentages, even when you don't need a high win percentage to profit. Okay, so I think this is a good place to stop tonight. We've been going for, I don't know, 45 minutes or so. I think it's plenty. Again, I'm a fan of keep it simple, right? We don't need to be so complex to profit. Sometimes the complexity messes things up. Any questions, comments before we stop? Okay, great. If you come up with questions, you can ask tomorrow or the next day. We have webinars running tomorrow, 1 p.m. GMT tomorrow, and then 10:30 a.m. GMT Wednesday. Okay, and I don't mind touching on cryptos in those webinars as well, and we'll be covering other assets, obviously, also. Yeah, ETFs, electronically traded funds, like our volatility index. Yeah, you can buy, you can sell. Absolutely, you can profit in both directions. Okay, great. Thank you all for attending. I look forward to seeing you in the upcoming webinars this week, next week as well. Keep coming, bring the questions, and make some profits, would you? I want to see you all coming back in the next webinar telling me about how much you made on crypto movements, okay? All right, bye for now. Eric, you made 10,000 down.